Hey, folks, welcome to InTheMoneyStocks.com's live trading action video. My name is Gareth Soloway, Chief Market Strategist here. Today's date is Tuesday, June 4th, 2019. So I want to talk about the massive rally today in the stock market. I predicted this just days ago. In fact, I highlighted it in a recent video just literally 2 days ago. So I want you to understand that this is very important. This is an educational kind of a trade lesson video about how you could tell that the market was about to pop big. All right, so very simple. It's so simple, you're not even going to believe it, but let's go over the signals. So, first of all, notice how about 3 weeks ago or 2 weeks ago we made a low pivot and then we bounced on the spiders here. So, you had a down move and you bounced. Then you had a down move where you went much, much lower, right? From this low to this low. That's a pretty big additional drop on the SPY. Now, in theory, and this is where it starts to get intriguing, in theory, the VIX, which goes opposite the market, should have made a high when the spiders were here, and it should have made a higher high when the spiders were making a lower low. That would have been the obvious thing. That would have told you that the big boys were building positions in volatility, the markets were going to crash lower, and that they were going to profit massively. Now, if you go to the VXX, look at this, folks. The VXX, when the spiders were making that first low, made a high near $34 a share here on the VXX. And again, this is the volatility index ETF, the VIX. Now, as the market bounced, the VXX pulled back. Then the market started to go lower again, breaking the first low pivot, as I showed just a minute ago, and making a sharply lower move. Notice the VXX did not make a lower low. Did not make a higher high. It made a lower low. That's the signal there. That was the obvious give, and that's why I moved out of almost all of our shorts in the research center, and we bought a ton, I repeat, a ton of long opportunities. So again, whether it was Tilray or whether it was US Steel, whether it was Intel, whether it was Baba, I mean, you name it, folks. We were just loading the boat left and right, and ultimately, look at the move today. I mean, Intel's having a monster move today. Intel's up over, I think, what is it, over $1.15 right now. Alibaba, we can see what that's doing. We have this long that we just picked up. We picked this up in the 149 range. It's already back to 155 almost. Just a huge move there. All these opportunities were basically queued off of their individual charts. So I had a level on Alibaba right here. But what gave me the extra factor was the difference here. Again, look, the VXX should have made a higher high here when the spiders, SPY, the S&P 500, was making a lower low. So here's the first low, and then it went down to this low. Now, notice the spiders also hit support, which I highlighted to our members as well, just giving us extra verification. But this was such an easy read. And again, the bearish sentiment, I can't even tell you guys. I mean, I flipped on Fast Money. I mean, all these guys were just so bearish Friday and yesterday after the close, just ridiculously bearish, talking about moves to the downside and so forth. That sentiment indicator was also a very good factoring in. Remember, when everyone is uber bearish, it's time to look at the long side. When everyone is crazy bullish and calling for new all-time highs and all that nonsense, that's when you want to get a little bit bearish. Bearish, exactly. Now, one thing I want to just point out about that, when the markets were trading at the all-time highs up here, I mean, this was a classic double top, but when we were right at this high, I still remember, an analyst from Bank of America called for a melt up. Think, one of the big hedge fund players out there, he was calling for a melt up and just a continued market upside. I mean, there were some of these big names just calling for continued upside. And to me, that was a dead indicator again that you were going to see the markets come in. And obviously, that's why I was short. I was heavily short at these highs. I mean, I had probably about 85-90% of my account was short at the all-time highs up here. And obviously now I'm, reversed that. I would say most of my account is, I don't have all of it invested at this point, but I would say about 60% long, and that's all in the money. I have a fair amount of cash, about 30% in cash, and I just have a few tiny shorts left over, just in case the market did break down further. I wanted to take advantage of that. But that's the way it is, folks. Again, that simple divergence. The spider's low, and you made a lower low. In theory, the VXX made a high and should have made a higher high. It didn't. That was telling you big money was not buying into this, and therefore, again, the markets would snap back. Now, by the way, I still expect further downside later in the year, but first, you have to have a little bit of a bounce here. You have to get more people bullish again before they can pull the rug out from under them. That's just the nature of the beast, okay? What else to say, guys? I mean, bottom line is, This is how it's done. We continue to profit left and right. I took another 30, I think what did I take? A 35% profit on American Airlines call options today that we just bought on Friday. Again, the profits in the options alerts are incredible. Look at this move on American Airlines. I mean, this was such an easy trade. I can't even tell you how easy this trade was. You had major support on the daily. You also had a trend line sloping down. Look at this. Look at this right down here. Connecting through pivot, pivot, and then right to the lows there. I mean, this was a no-brainer. It almost is a perfect channel, by the way, too. I mean, look at this channel. It's almost parallel lines. So you're right at the low end there. So we picked up some call options there. And again, that's just the way it is. I just quickly, just to show you guys, again, this is what I do here. This is our website, inthemoneystocks.com. And again, if you simply want to see the track records, you can go here. Here's our two main services, Research Center Options Alerts. You want to see the options track record. I don't know if it's been updated I don't think it's been updated today. But you can see, I mean, look at this. This is awesome, folks. I mean, a couple ones that expired, but I mean, this is just incredible profits being generated. And then for the Research Center track record right here, I mean, this is just my pride and joy right here. 220, almost 226%. I didn't add in the winners in the last couple days yet either on the track record. And sure enough, I mean, this is just epic. I mean, you can see we do have some losers out there, 3.5%, 2.6, 2.7, 1.6, and just basically a 0.01% right there. But, I mean, look at these gains, 11, 10, 11%, 6%, 13%, 7%, I mean, 8%. It's the best trading market we've had in a long time, folks. I mean, this is the market where you want to be swing trading. The profits are just exponential. It is very, very cool. So, bottom line is, here's it is. This is if you invested all of your money in each trade. We never recommend that. Generally, we say 10% or less. If you did 10% of your account in each trade, you're up 22 points, almost 23% for the year. And by the way, there's no hedge fund out there making that type of money. And by the way, they charge 2 and 20. Some of them are a little less now, but still, I mean, you're talking about you have to have at least $1 million with them to even get involved. Then they're going to take 2% off the top and 20% of the profits they generate. I mean, here it is. We charge $99. $99, and you're generating better returns than the best hedge funds in the world. That's it. Simple. And by the way, there's a 7-day free trial to boot, where most members end up making enough for a year just in the first 7 days. I mean, that's the way it is. All right, have a great one, guys. Take care. I'll talk to you soon.